Great to have everyone here on this new platform, Rema. This is pretty cool stuff.
Oh, that's pretty cool.
We have it's first time using it, so hopefully it works. If anything comes up, just please chat us. I guess there's this ping box here. Real fast, I'm going to quickly share my screen real fast to quickly give a brief introduction to the group and what we're doing. So real fast, welcome to token distribution and DAO governance. Pretty excited to have Stani here from Aave and Ross from LexDAO. Again, per usual, once again, I'm asking you to join another meetup. I know it feels like there's a lot of meetups, but I honestly feel like, especially right now in this time of COVID, having these virtual meetups is a great way for kind of us in the industry to stay connected and still keep on sharing new ideas. So real fast, if this is your first time to San Francisco DeGov Decentralized Governance Group, we welcome you. We're excited to have you here. The why of why we started this meetup group was because our current governance systems are breaking, right? They just are. We see it all the time around us. It's time to explore some new ideas and see how to kind of fix the system. For us, community is key. We're only as strong as those around us. And when you come to these discussions, what you should be expecting is big, thought-provoking discussions, learning sessions, and parties. And this is decentralized governance group. So anything and everything is available. Everyone is an equal participant. If you have an idea, if you have a question, if you want to contribute to the meetup group, please feel free to telegram us, feel free to join. Real fast, I want to give a big shout out to our partners, Blockchain Acceleration Foundation. Thank you, Cameron. They are the one that put on this whole Remo event. It's going to be very, very, very excited. Cool. And let me just, real fast, who am I? If you haven't met me, I'm Aaron. Born in the Bay Area, blah, blah, blah. Got into blockchain about 3.5 years ago. And the only thing you really need to know about me is that ranch dressing is the best food pairing in the world. Ranch dressing goes good on and that is
island dressing. Wow. Okay.
Ranch dressing. That I will die on that hill, Ross. I will die on that hill. Again, companies survive, but communities thrive, right? And I think that's super true when we talk about not just what we're doing at DeGov Meetup, but I'm also the founder of a company called Govern. What we have here with Stani, with Aave and Ross and LexDAO. What they've really done is they've built communities around the product, around the companies they built, which I think is awesome, right? And that's kind of why we have them here. So again, we have Stani and Ross here today. And without any further ado, let's get this event started. So awesome. Let's go real fast to start off. Why don't Stani and Ross, why don't you take 5 minutes each and kind of quickly introduce yourselves, maybe how you got started in blockchain, and then a little bit about Aave and LexDAO.
Yeah, sure. I don't know if I have 5 minutes of content in terms of an introduction. I don't know if I'm that interesting a person, but my journey so far, has been going from a traditionally trained lawyer to more of a active participant in tech and being a coder that helps kind of quarterback deals a bit more practically, and kind of being more aggressive about knocking bankers and other people out of my deals. But it's been kind of an interesting journey. When I was working at my law firm, I think my first interest in blockchain was Bitcoin hackings of banks. There was a lot of hacks where a bank's ledger would get encrypted, and then people would say, pay us 10 Bitcoin, and then you can get your data back. That was obviously a risk factor that our clients were asking us about, hey, should we be buying Bitcoin and hoarding this to pay off this whole new attack vector that didn't exist until 10 years ago. So for me, it seemed like there was clearly something happening here in terms of banks and traditional financial institutions were saying, don't look at all this new internet money stuff. It's all a scam, but yet we need to buy Bitcoin right now because people are hacking us and we needed to pay them off. So I kind of noticed that dynamic just being a lawyer. I was like, a lot of the cool stuff that's happening with, blockchain and, this new emergent thing called Ethereum is saying, it's not only about making, money live on the internet, but also making contracts live on the internet and being able to knock all the people out of all the deals and making it completely about, peer-to-peer, value transfer and actually adding conditions and, a bit more complexity to that whole thing. So I kind of saw the writing on the wall and I was like, wow, there's a lot happening. There's sort of this almost historical moment of, financial markets changing to this whole new network of people using computers rather than being in offices. So I was like, I'm joining the fray. I'm leaving my law firm job, after 2 years of the tour. I kind of rummaged around as a freelancing attorney for about a year, but then I started saying, should I just be an attorney that people talk to and ask, is my thing a security, or should I be an attorney that says, I'm just going to save everyone money? So for me, learning how to code, working with open law, working with some of the developments with, DAOs, which are kind of, in my opinion, new kinds of companies, seemed like kind of the way to go and a way to hedge against kind of where my training, was kind of pivoting me was like this entirely old world, being a lawyer, working with banks, but, all we are problem solvers. And being a coder seemed like a much, a more effective and aggressive way to go about that. So I don't know if that's been 5 minutes. I'm having fun.
Yeah. No, that's great. That's great. And I guess real fast, it's quite
Yeah.
a journey. And before we get to Stani, I just want to say, like, what you started with Bitcoin, you started seeing all that illegal, you saw the writing on the wall, and take it from like that point to like when you decided LexDAO needed to become a thing.
Oh yeah. So for me, like LexDAO was kind of inevitable in that I always knew that attorneys and their clients were going to resist a technology that can replace them, just by saying, yeah, these are just checkpoints on deals. This is automatable. They were never going to be supportive of what I was trying to do. So I was like, there's, a natural affinity of people like myself. They're trying to be, tech curious, trying to be, a lawyer does smart contract coding. Like, we need to band together. This is Driftwood scenario. If we don't work together, we're going to get, gaslit for, the next 10 years, and coders are going to eat our lunch. So as lawyers who feel like we can solve problems, we can kind of move value from point A to B very predictably and add value to the market. It seemed like a no-brainer to say, like, let's band together. Let's create products around all this crazy stuff that's happening with internet money, and then just take it from there and be more of a participant than just a sideline observer / fudster. So yeah, LexDAO is inevitable. It's being discovered. I just kind of needed it. So yeah.
Nice. That's awesome. I think that makes a lot of sense. Kind of goes back to that idea of like solving the problems that you see first and are in the world. And, definitely I think seeing that crossover between like legal considerations, whether we're talking about like cryptocurrency in general or like DAOs, which, and governance structures is super interesting. And before we dive into that, let's shift over to Stani for a second. Stani, thanks for joining us. Quick intro would be great. A little bit about Aave. And before we get started, I want to say a big congratulations. Like, if you guys haven't been following along with all of the stuff Aave has done just today, you guys got to check it out. They've shipped a ton of new features. They just announced new a round of raising. Like, amazing job. Like, mazel tov, congratulations. And use that to kick off a little bit of an intro on yourself.
Yeah, thanks, Aaron, and thanks, Ross, for the introduction as well. It was very interesting to hear. We did a lot of releases today, kind of like, but I will get a bit later in those if I have a chance. A bit of my background. So I used to be a programmer, and when I was in my teen years, and I basically did different kinds of applications, but then drifted into finance a bit and did a couple of fintech startups. Very short period. I was very young. I think probably my first like fintech startup, I was maybe like 18 or something. So I didn't even know what I was doing back then. But then decided to actually, interestingly, as Ross, to go to study law and basically went to law school, and I still was very interested in finance. And I had another fintech startup during my college year, beginning of my college years, and basically that was related to kind of financing app developers earnings, kind of like working capital wise, so they don't have to wait months or a couple of months to get their earnings from App Store, and they could get it quicker. I always did like all of the startups that I had, like I always did it like short term. I never imagined like them becoming any kind of like a big companies, or even like more than like a hobby project. So at this, like the next one, what I was doing is I was participating in Ethereum kind of like meetups, like just like this one in Helsinki, Finland, where I'm originally from. So we're now Aave has headquarters kind of like in the UK in London, but basically I'm originally from Finland, and I went different kinds of meetups and got more involved into the Ethereum community. And then basically in 2016 tried to build something related to financial transactions, and especially like loans. Somehow I was always attracted to this financial field. So we basically built very first lending protocol on Ethereum, which was called ETHLend, which is short for Ethereum lending. Yeah, and that was like a project that shouldn't have to like become anything. It just was like we wanted to test it out and see how it goes, and I continue my studies and so forth. And it got more popularity and kind of like traction from suddenly we have a community, suddenly we had like a fundraising as well, and suddenly like we're building more and more stuff, and kind of like it just continued. And that was like era before like stable coins or any like liquid asset that you could use in a pooled way as collaterals. And at some point we branded from ETHLend to Aave, because we basically wanted to kind of like have a bit fresh branding. And then beginning of this year, we launched the Aave protocol. And the idea of Aave protocol is that you have like pooled money market where you deposit and earn, and basically you can borrow. You have basically credit line that you can borrow, and now even delegate that credit line to someone. And we kind of changed a bit the narrative in a way that it's not about any more like total value locked in smart contracts, but it's also about kind of utilizing that value. So flash loans is a great example what we have in our protocol, where you can borrow without a collateral for one Ethereum transaction. And the idea is that we kind of try to capital efficiently use all the locked value that we have in the protocol. And the whole kind of like value there exploded in a way that it started to pile up, and we can imagine that it will grow so big. There's now 200 million worth of value locked, and the market size is 2.5 million. So it's basically the locked value plus borrowings. So things escalated very quickly in short period of time. But like we're excited what we're doing. We're a team of 17, and I think I run out of my 5 minutes, so I think I will leave it here.
No. That was a great introduction, and really quickly, and tell me if I'm wrong, Stani, but for anyone that's not familiar, with what DeFi protocols are, right? It's this idea that you can lock up one type of cryptocurrency or not, and you essentially can borrow from that cryptocurrency of a different type, right? Instead of doing peer-to-peer, where like I borrow from someone else, it's these groups, like we all contribute to a liquidity pool, and then people can borrow from that liquidity pool. Just for anyone that's not familiar with the topics. But what I a little bit here. So like we said, this is the first event of a 6-part series that we're doing with the Blockchain Acceleration Foundation, where we're bringing together like protocols like Aave with DAO first structures like LexDAO. The idea is to have a little bit of a discussion, a little bit of a debate here, right? Because we see as new types of organizations start to emerge, we see new governance patterns. And there's a couple, there's differences. How should we build these new organizations? Should we start with like a DAO structure or a protocol, right? There's a lot of people that talk about this idea of like, are you building a town square, which is that like you come and you like see what happens, kind of like a DAO, or a playground where you come and there's specific tools that you use, kind of like a protocol. At least that's kind of how I break up in my eyes. So real fast, I'm going to shift it back to, and I don't want to do much talking. I want to just let Ross and Stani kind of have this one out, but I want to start with kicking it to Stani. Like you started with ETHLend and then you moved to Aave. We've read your white paper, and even in the white paper, it talks a lot about the governance tokens, whether it's A tokens or Lend. When you were thinking about how you started it, like, did you think, like, how did you think about the decentralization? How did you think about the governance structure? Was it kind of governance first, DeFi second? And then kind of Ross, I'd love to hear your take on like, is like what like what your considerations are, both from legal and then actual governance. So Stani, to you first.
Sure.
Yeah, honestly, like in very beginning, in the Eatland era, I would say like we didn't think that much of a governance because like we were just building stuff, like we wanted to just kind of build technology and just deploy it and basically do it as immutable as possible. Well, basically back in then in 16, 17, the whole like DeFi space wasn't like as optimistic as now and kind of like strong in like it's weird because there was the DAO and there was like lessons learned there, and but still kind of like when it came to building financial primitives, like pretty much you follow the Ether Delta way where you just deploy something and make it immutable, which is clunky. When you need to update, you have to migrate the liquidity and you have less kind of like governance there, basically. So I think just maybe like recently when we have looked at different kinds of governance structures like MakerDAOs, for example, and like what is interesting is that for us is that we see that actually like you don't need to do like perfect code and just figure out everything at one spot and just like put something immutable. You can just create something in terms of like financial products or protocols in a way that if you want to, you can change it in the future, but let the governance, like let the community that's controlling it decide upon that. And like what I like about this is not the only thing about like the decentralization and democratizing stuff, but actually you have this collaborative intelligence. Like I, as a person, I'm not that as smart as we three together, or like let's say all the 41 persons together and us three basically here today. Like that I love a lot because that really gives the strength. And I love the like town square experience thing because like you have people who come and go and some are more active, some are less active, but you kind of like always, especially if you have important decisions, you have like multiple opinions and it's not based on just like one team. I for me it's kind of fascinating. But in the beginning, we didn't think anything about governance. Like I think it's basically last year or so that we have been like aggressively like trying to like get this thing moving.
So yeah, I guess Ross, kind of from your perspective, when you like both from a legal and then like laws intertwined with governance structures as well, like what are your worries when you kind of like, do you think that's the right way? Do you have any worries when you hear that they start with a protocol and then they're like going to get to governance eventually?
Yeah. I guess from my perspective, the theme of due process is always relevant. If you have a smart contract, a financial pattern, a protocol, if you will, that allows people to, transmit value predictably, participate in lending pools or whatever. If you change parameters and change the nature of that deal that's represented in that smart contract, you are, taking an action that might be, negatively impacting people's financial positions, to their detriment. So I think, if you have a single team that's kind of unilaterally changing these things, there are possibly legal implications in terms of damages, that might, be an opportunity massage if you delegate that more to a DAO. So generally my preference is if you're taking, positions, if you're updating smart contracts that affect people's finances, it's better to not have that just be one person, obviously, in terms of just the allocation of liability. If it's a more diffuse decision, maybe there's a governance token, the participants in that smart contract, the frequent users, they can change the parameters. That seems a bit more palatable than just saying like one team is going to change, maybe the rates associated with lending or, changing some other control parameter that could probably make people feel like the deal has changed. So I don't know if that's super helpful, but generally, I think the theme that we've seen is that giving up control is also a way to not only secure protocol in terms of security, to make it harder to compromise accounts that have those controls, but also a liability diffusion mechanism. Not only one person is denying another person due process, not only one person can get sued for those actions. So that's kind of the perspective I have there. Kind of LexDAO approach here is that we have people who think about these things, who think about the aftershocks of things happening on Ethereum in terms of like meat world liabilities. And we're saying like, let's have lawyers help quarterback these sort of, protocol decisions. And LexDAO as a DAO that's growing its body count, that's also trying to create a sort of reputation for managing smart contracts and writing the code. We're always on tap to sort of be a heatsink for these sort of contentious protocol decisions. You can just say, Lex arbitration is going to decide, the parameters of this smart contract. They'll wear the operator role. Maybe there'll be a minter for a token. I see that as advantageous because, the law and code is just a tool for predictability. And, law over a DAO is, kind of an ultimate way to kind of infuse predictability on who knows what's going to happen with an upgradable smart contract, right? You just hope that the team that has the operator controls and the keys to upgrade a smart contract is going to do things that are A, secure, and B, equitable. Pushing that into a sort of legal coder DAO seems like maybe a stopgap or maybe a sort of floating service that might be relevant here. Again, the whole priority from my perspective is just to make everything way more predictable. Code is a risk, law is a risk. How can we just make that more part and parcel and simpler to do? So yeah.
Well, it's interesting here, and I think there's like two trade-offs that we got to like talk about, right? We talked about like I know that I had a lot of when similar kind of protocol Compound to Aave. Like I had a lot of criticism of Compound, always kind of keeping a closed door on how rates were determined, right? Kind of the same things that we complain about in like the Web 2.0 world, like how rates were determined. But I think there's a trade-off here, right? And so like Stani, like going back to you, do you think Aave could have like grown the way it has? Because we want growth, right? We want growth in the sector. Do you think we could have grown if you had started out as like with this like mutual decentralized governance decision-making process? Or do you think that would have like made it harder to grow at the way you guys did? Honestly.
Yeah, it's kind of like yes and no answer. I mean, like definitely like the only challenge is basically like certainty, and then basically kind of making changes quickly, because like when you deploy a protocol in the mainnet, you basically want to have a bit of track record before you go more towards this path of towards decentralization. I definitely think you could do it for the day one if you know like your community and somehow like they're able to respond. But I think the bigger problem here is like the consensus. So like if you need to change quickly something and you basically have like a widespread governance, you always want to have like time in between decisions. Like if like one of the things that I don't like in today's like the DeFi governance systems is that the decision making happens so quickly. Like first there is a sentiment poll, and by the time it's over, you hear from your friend about it and over Telegram, and then at the next step, like the voting period is over, and like something happened, and like there should be like a lot of time between proposals. Like people should actually think a bit more, and even the proposal like kind of like baking should start like in very formalized way, that something's very kind of like already well thought out ideas go into a like some sort of like proposal framework. Like for example, in Ethereum we have the EAPs, and I think that's a good example how they could be done. And then like you have a process that goes into some sort of sentiment polling and eventually as a real proposal, and enough time to vote and participate. So like I can imagine like if like it becomes like a proposal farming that you have in 2 weeks, like let's say 5 proposals, that's already a lot if you have to vote on that. Like, and even if you have like governors, so let's say like votes are delegated to one or another direction, and you get more professionalized kind of like decision making, still you need like a lot of time in between, because like that's essential. That's my like concern. When the what Ross said about like kind of like the legal wrappers and that kind of stuff. I think those are very vital, because the kind of like DAOs are in one way a new concept that there isn't that many disputes compared to other stuff. And at some point when there will be like disputes, and then you have a DAO, and then you have people behind the DAO, and then you're thinking like, where's the responsibility, where the damages go, and if there isn't legal entity in between, it might be that the members of the DAO might be responsible. Like, I'm not saying that like particularly, but those are the challenges that we're facing when a like something goes to the court in terms of DAOs.
Yeah, I mean, sorry, Ross, I want to get you a chance to respond, but I think that what you're bringing up,
Sure.
This idea of like token governance versus DAO governance, right? And like, what are the trade-offs, Ross?
I'll be delighted to answer that question, but first, I know that Stani mentioned the EIP process. I would actually feel better if that was managed by a DAO and ratified on chain, and we saw the result actually be incorporated into the code somehow. But anyways, to pivot more to the sense of
why do you think that real fast? Yeah.
It just feels so ad hoc at the moment to have kind of this GitHub process and then a kind of nebulous sense of Ethereum core developers who kind of still call shots and create very financially significant changes to the protocol. That's like, we should just have a DAO, we should dog food. We should actually, eat our own materials and show how that works, and yeah, why not?
That part basically, the Ethereum kind of like, I mean, there should be a DAO deciding on the proposals, but basically what my point was more about that the proposal doesn't come out of the blue, but there's actually a process there. And I think it's run as a DAO. I don't think like why isn't it happening yet?
Great question. Yeah. Maybe we just like post at the wall.
Yeah, I was like, all right, we got 40 some odd people. Let's start this guy.
Right, the
Ethereum a DAO. But DAOify Ethereum, like if that's not the biggest meme of a meme I've heard in a while.
But I didn't want to miss your question though, Aaron. So in terms of like token governance versus a DAO, I see those as pretty interrelated. Tokens are a way to give weight to accounts to make decisions. Often, times tokens are just used to kind of create a distribution of, people who can claim utility or, maybe do something else with the token. But they're also, a great way to sort of rank the effect of voting. So, the Aragon approach that I think, has been very cool is that they have, pretty good system of using something called mini-me token, voting, double voting, also having kind of emerge out of that token balance. So one thing that we actually talk about a lot in the LexDAO is even is the DAO. Like, what is the I think ERC20 token is a very good for a DAO. I also do want to see more in the space token distributions. So you could go say, like, hey, Omise Go, or like any other ERC20 token that's been kind of scattered and created a meaningful distribution and stuff. I think that's going to be very cool and natural progression towards DAOs and saying, like, we just have a DAO and then hopefully people are going to join that takes and then put them into voting. Yeah. So, anyways,
that makes sense.
So
hey, Ross, real fast. Yeah. Sorry, Ross. Your sound is kind of cutting in and out. I don't know if you want to try turning your video on and off real fast, just to see if that'll work.
I'll turn my video off. Yeah, that's been a problem. Yeah. Sorry about that.
No worries. No, but I think that makes sense. I think you bring Aragon and I think this is something I know that being part of Metacartel something, or being involved in the Metacartel ecosystem, and what I've heard echoed in LexDAO as well, is the idea of like having all the governance happen on chain with immediate kind of responses in the process, like not having a full process, has both advantages and disadvantages. Oh,
certainly. Yeah.
Right. And I know, Stani, I was checking out the Discord channel earlier, and you guys have a whole channel based off governance. Do you think, like, I guess both, there's obviously pros and cons to having some of the like on-chain voting to off-chain processes, and you have that like human interaction to be like, is this something that's gonna like we want to do? Obviously, like the question becomes like, is that scalable? I guess like, one, Stani, do you think like how much will you keep your governance on chain going forward and going forward? And then, to Ross, like, what do you think the trade-offs are, again, from like a governance standpoint?
I think in our case, like we had already like a governance smart contract ready, I think a couple of months before when we noticed that there was like a lot of kind of like assets coming into the protocol. So we decided that it's time to accelerate the process of kind of like giving the power to the governance. And I think in roughly in month and a half, even quicker, depends a bit of the scheduling, we might be already in a token-based governance, and that's kind of like fascinating. But yeah, I think like the version like DAOs and token-based like DAOs, it really depends on the use case. And in my case, in DAO, I mean in DeFi, I would say somehow like it's justified to have this kind of like let's say one token, one vote thing. But then you can change a lot of things. I mean, you can change based on user behavior, like the voting mechanisms, a bunch of stuff. So that's kind of like an interesting part. But for us, it's like coming up steps. So this is something we're waiting quite a lot. I mean, we are very excited about product updates always, but this is something even more because this is going to be quite big for our history, like for Aave.
That makes sense. And I don't know, Ross, if you're still here. It looks like you might have dropped for a second.
Oh, I turned my mic off and that made me seem to have dropped off, but yeah, I'm here.
Oh,
yeah.
All right, perfect. No, I think what you're bringing up, Stani, is a really good point. I guess real fast, like as you start to transition more to your token governance model, like what are you most scared about? And like kind of because we are always giving up a little bit of control, like what I might say to your benefit, but like what is your biggest worry as you give control up?
My biggest worry is like that if exchanges start to vote with their like clients' inventory, that's like because we still have people who think about this way. I think this boils down to Ross's kind of like examples where like code is law and there's doesn't exist anything else. And like yeah, but there's still like still other stuff which is, I mean, there's still like jurisprudence and like legal obligations. Like blockchain doesn't live in vacuum in that sense. And I think like that kind of behavior might be like malicious even. And I think like even those actors who are doing it might not even see it as malicious because they think about this way. And I think that is still like very it's just a scary thought to me that some entity could just come and grab a bunch of amount of voting power and just start to make decisions. But I always think about this thing, and I think in one way you can always fork, and which happens. I mean, you can always take that open source software, make exact copy with your community, and then let the liquidity that wants to be in your kind of community to follow. So it's doable in DeFi as well, though. I mean, it's always there as an option.
That last point is actually a great thing. I'd like to kind of follow up on. I think Ethereum and smart contracts offer really low transaction costs to entry and exit. The more if you about how to spend the money, you can leave and take your ball home, get your initial. Ethereum is
Ross, can you just try it again with your video off? Sorry, Ross. Can you try that again with your video?
Oh yeah. Apologies, Chromebooks, life in the fast lane. The point I was trying to make is that smart contracts and Ethereum make it very easy to enter and exit positions, and those positions might be DAOs. They might also be a sort of liquidity position, Aave or another protocol. And kind of the point related to that, more in the DAO space is, Moloch DAO has kind of really finessed the point of rage quitting and leaving a sort of investment club and having low risk. And I'm generally just excited about this idea of, it's very predictable about what the outcomes are if you enter into smart contracts versus, old meat world financial arrangements, which are contingent on jurisprudence. They're contingent on the execution risks of state actors, figuring out what's going on with banks and what's going on with their armies. So a pure code-based approach, especially where most of commerce and information lives, seems completely necessary and kind of no-brainer. So yeah, I'm kind of excited about this topic. But otherwise, there was also the idea of other drawbacks using DAOs, having votes on mainnet, not resorting to off-chain stuff. I think really the differentiation I've seen, at least working with open law and allow, is that venture DAOs are usually it's going to be worth it to pay for gas and have sort of the transaction costs of executing on mainnet, because you really have a really close window between making a decision and having execution and having the funds leave the bank. Whereas, more, social clubs might want to use Ethereum code to make their decisions irreversible. They probably don't want to use chain for everything they do, because the gas costs don't make as much sense if they're not sort of part and parcel to a financial transaction of greater value. So what I'm seeing, at least in the Aragon scene, and what OneHive has done more recently, is they've moved to XDAO, a sidechain on Ethereum, in order to record votes and do sort of day-to-day financial transfers, and then they ultimately will settle on the Ethereum main chain when it makes sense. I think we're going to see a bit more, especially as it seems that a higher gas price is the new paradigm, and it costs a couple bucks to do anything on Ethereum these days. I don't know if you have thoughts on that, Stani, or if there's follow-up you might have, Aaron, but kind of the rant I want to make. So
yeah, I like the gas thing is pain in the ass, because like in one way, like doing like silly transactions and you pay £5, and of course like the banking system costs more, but it's not like that direct. Like
it doesn't feel good.
Yeah, it doesn't feel like like you don't feel it. And I think like some sort of like signing instead of voting could be a cool thing. And I think that, like, for me, I sometimes I just don't vote, because like it's basically a process that I need to do in gas, and if it doesn't pass, I have to put a higher gas, and it really it's but you can compare it to something like you have to go somewhere by public transportation, by car, and just vote and come back. But it's still like it shouldn't be like that. It should be easier. Like you just press a button and don't worry much.
Well, I think it's what I want to follow up on for both of you guys. Ross, I think what you pointed out as well, I was going to ask you, and you answered already, was this idea of like, Stani said what he's scared about, or what his biggest worries are, in moving more governance out to the token holders. And Ross, you kind of hit on this idea of like what the opposite side, what the worry would be about not moving holders, kind of like what you're saying, this idea that code isn't law, right? The more power you keep in this team without tokens, it's like going away from this like predictable behavior. So we kind of see two sides of the coin. But we've got kind of following up on that, and we've got a couple of Q&As about this as well.
Oh yeah, there's a lot.
What'd you say?
Yeah. Oh, there's a lot to unpack on that. Yeah.
Right. And following up on that real fast is like, as we kind of, whether we're talking about malicious, like potential malicious attacks and voting, right? And there's a couple of Q&As about this, whether that's exchanges voting, or whether that's potentially like seeing someone take a flash loan out for voting tokens and voting. There's a big MakerDAO scare a while back. If you borrow enough and control the whole voting power, like if, let's say, a malicious attack does happen, should that be honored? I think it would be interesting to get both Stani, your perspective from the protocol, and like Ross, your perspective as a legal engineer. Like malicious attacks happens, a vote occurs. Do we honor that vote?
That's an awesome question. the kind of the cool thing about smart contracts is, it's going to be honored whether or not the members like it or not, if they are able to, kind of opportunistically attack the code. Like, I don't know if that's an attack so much as just, hey, this was kind of part of the deal and you didn't notice that. There are, in the old world of traditional legal contracts, your counterparty might be able to understand the language of the deal in a way that's advantageous to them. And you're like, oh, wait, I didn't mean that, but yet I guess that word means what it means, and you kind of get the better of that deal. I think that's kind of how it's playing out with smart contracts. And I don't see a role for sort of adverse legal consequences when it's kind of laid out bare in the code and people exploit. Cash loans are an example of that. I think Moloch DAOs are kind of insulated against that attack vector because joining a Moloch DAO requires your proposal to be sponsored. So even if you go nuts and leverage up and somehow can seem like you can submit a lot to the DAO that you don't aren't able to honor, that shouldn't pass the filter if it's an attack. But yeah, that's a fantastic question. Stani, I don't know what your perspective is, but basically my end thought there is that if you can get past the code, then it should be honored. But kind of the cool thing is be a stopgap and say, hey, clearly this wasn't the intention of the people that deployed the code, added a bunch of money to it, so it shouldn't be honored. And a DAO, if it can act, should siphon funds, or people should just rage quit if it seems like the terms of the deal have been altered, beyond the of what people wanted. So yeah, good stuff. I like it.
Yeah.
What do you think, Stani?
Yeah, this is very this is where the funky parts come, because you have you have a smart contract which is kind of like a machine basically, that once you run it and you can't basically undo it, and let's say the case is like that. And I think still if we look at the very the actual legal context, it's it goes with the principles of law and then the the written text and so forth, and kind of it's very difficult to argue that that this is something very decentralized, or it has been executed this way. The responsibility might come if there's a court and someone didn't want to invest into DAOs or contribute there, and was not an intention, for example. That's a good example where a court might say that or judge that that actually, there wasn't intention, no agreement, and basically need to get the funds back. And then it might be an obligation, whoever is members of this community needs to give it. And it's quite interesting and difficult. And I don't know how to avoid things, because in one way you could be anonymous, but then you lose certain things. Basically, you lose your own. I mean, you're not exposing your own social capital, but you can have an anonymous character and participate in DAO.
Lose deals, yeah.
Yeah.
Well, Stani, real fast. I mean, because you like Ross, if I could summarize Ross' point, he's saying if you find a vulnerability in the code you are good to go. That's good.
Yeah.
Stani, you're the one that writes the code. Let's on the other side, what do you write the code? If someone found a vulnerability in Aave's protocol, I don't know if you want to say it on this call or anything, but if they found a vulnerability and attacked it, you're not to answer that question, but would you honor it? What do you think?
You mean, would I honor code of
let's say someone maliciously tries to attack the Aave protocol, and it happens, and all of a sudden Aave is presented with this choice, okay, obviously this person took advantage of a protocol of a mix up on our end. Do we honor it? Do we try to backtrack it? Do we try to get out of it?
No, you can't do much. It's
so you have to say honor.
I mean, we did have a situation where basically there was a hack in another protocol, and basically they took the funds out of there and they put into Aave compound, and basically there was substantial amount of funds, and and this hack protocol, they called us, and we just kind of like were thinking like, okay, like what we could do. Well, we do have the keys, so we can't do much, but there was one way we could basically get the funds out of there. But then we were in a position that we can't do it because no one legally enforces us to do, and kind of we just didn't do it, and that was it. Like, it was like, long story short, they asked, we denied, and like everyone went forward, and the attacker took the funds away from there as well, and returned it to the rightful owners, and and which was very good, because it might have gone in the other way, and that will not be.
Yeah, I mean, I think that's interesting. I guess, like, looking back on it, are you happy with the decision you made? Would you do it again?
Yeah, definitely. I like, these are always like kind of like case by case basis, because you need to think always like what's there. Like, you cannot just jump into this. You have to go all the loops and think what's the best. But end of the day, it's what's the best for the protocol. That's it. That's what matters. The protocol, the community. You lose that, you lose everything.
Well, let me just kind of challenge you on that real fast, and then Ross, I'll let you jump in. But challenge you on that real fast is, you say what's best for the protocol, right? I guess my question is, do we mean protocol or community, token holders or governance system, right? Like, because we're kind of making trade-offs here, right? Like, is it always what's best for the protocol, or is it what's best for the token holders, or what's best for the community? Like, well, I guess, what do you see?
So this is the thing, like, token holders always are looking for their bags, for example, or in a good way as well. Like, I mean, there's not a bad way to do it. But then users, the general community. So it basically, like, and I think it's not just those active ones. Like, we always start to figure out like who are the active people who are there and what kind of opinions they have. Need to look a bit of like what others are thinking of our space, and then also thinking a bit what those passive users or token holders or community members that aren't like saying anything, but like might say, because this is their policies, and this will not be something that might be like tolerated, for example. It's not a easy thing to do, but I would say that like the community finding it, and like you will find like when people are actually happy what you're doing, end of the day, like if you make a proposal decision and you make it in a way that it's really aligned to the community, I think that then it's pretty good. I mean, if you start to see people like leaving the project, or then it's most likely it wasn't a good decision.
I guess real fast before we kick it to Ross, real quick answer. This recent raise, was it a safe? Was it equity? Was it a token, or was it like a SAG? Was it for a governance?
This recent raise, yeah, it was token. So we basically we did token positions. Because we had an ICO 3 years ago,
right?
And basically the token is trading, but like the difference from us from the kind of like what we have seen in DeFi space, where you have already VCs and they're selling the token
right.
to kind of like now retail consumers. Like our kind of path is different. Like consumers bought the tokens and so forth, and they're selling it to VCs now. So like that's like an opposite direction, and it's interesting to see like how it works.
Well, and Ross, so I want to get your take on the same question I asked Stani, and then I have one more question for both of you, and then we'll open it up to Q&A for everyone. But so Ross, same kind of thing. Is it always what's best for the protocol, the token holders, the community members? Like what is numero uno? What is primo here?
Yeah, I would say the numero uno here is the protocol, because that's where all the value accrues, and that's the whole driving thrust of the community. What is the community beyond being users or supporters of a financial protocol or some sort of goal, at least. So it has been natural in the space to see protocols start off kind of centralized around a team that developed it. But that's also, kind of a security reason. They are in the best position to understand potential bugs or attack vectors. They might, maintain a key to upgrade the smart contract. But that I'm seeing play out is that these, centralized teams, these operators that kind of birth protocols that create, net public goods, they create value and earn on, your money. There's an advantage to saying, hey, we want to kind of tap into the crowd. And an easy way to do that is, using DAO. And better yet, putting those tokens in the hands of actual users rather than saying, we're just going to sell it on the market and just hope it redounds the value of the protocol. So I think DAOs are a way to kind of funnel all this stuff, users and protocol developers, into one pot that can actually kind of coordinate tightly and do meaningful stuff. So that's kind of what I'm hopeful for to see more with all these DeFi protocols is we can have teams that get safes. They might have capitalized to sort of make sure the protocols work. I haven't seen any sort of crowdsourced smart contract yet, because I don't think the crowd is as good as centralized teams and developers at creating a secure, valuable code, but they're very good at being, sort of vanguards to the code and users, marketing, and generally, bringing more value in. So I think it's kind of just the life cycle. It would be cool to see more sort of, pure DAO, Reddit, a subreddit goes into a DAO, and then it says, hey, let's deploy some code together using our DAO. And then it's a bit more, tight and less starting from centralization, but you got to start somewhere. And, I think it's been kind of borne out, and it's been a good thing so far. So, yeah. I don't know if that's something.
No, definitely. And let me just quickly summarize that point, right? Obviously, still true to that code is law kind of mentality, but like basically the protocol is numero uno. But you believe that the best way to keep protocols and community members and token holders all aligned is just to wrap it all up in a DAO. And that, basically that kind of aligns with the incentives. That was my takeaway from that, at least. So.
Oh, totally. Yeah. It's a way to take balances and push it into execution very quickly.
That's actually a great lead into kind of my final question to both of you guys. Sorry to cut you off there, Ross. I just want to so we can open it up to any Q&As, and then we can kind of open up to more networking afterwards. I know, Stani, there's a lot of features I want to hear about as well. So, but real fast, looking at this, we have two different approaches, right? There's the DAO first approach, kind of what Ross was just talking about. And then there's the protocol first approach, which Stani, Aave, kind of what you guys have done. Like we'll start again with Stani. What if you could do this all over? Like I want to start like figuring out what are the takeaways, like what are the best parts of each of these approaches that we can start to combine. Like this is a learning session. What's the best from each of these approaches we can take and move forward with in a new experiment? So I guess Stani, from your point of view, if you had to do everything over again, like in maybe in a minute or two, what is your what are the biggest learnings you've had? And what are the best parts about like your like protocol governance structure that you would like say is a must for any new project?
Learning wise, I think like I like the model where we kind of like we had a token. Well, not in the very beginning, but I mean we were developing and promoting ourselves. But at some point when we needed more resources, we basically issued a token. And then we had a token holders, and then we were building with those funds the protocol, and now we're basically transferring that protocol to the governance. So I kind of love that model, but we have different kinds of utility functions in the in the tokenomics. So that was for me like it was a kind of like one way, like one we could do it without it. So I think like pure governance and some sort of like already kind of like at the beginning. So it's important that developers have kind of like space to develop things, but like the governance should be early in some way, like softballing and going into the more decentralized governance model. So that's what like is important. One thing I really like now, if you look at different governance models, I still think the Maker DAO's token-based governance is okay, because there's like a bit of time before like there's kind of multiple proposals in a short period of time. Like it works pretty well. It's also slightly too quick. Like if you don't follow all the time, like then it's kind of difficult to be active. But I think like at the end of the day, like the governance looks exactly as your community. If you need 12 governors, like who gets delegated votes and they can govern the whole thing, I mean, why not? It works that way as well by giving mandates.
Yeah, it reminds me of this tweet that DeFi Karen posted today of like permissionless but not managerless, and I like kind of actually.
Oh yeah.
I actually love that as a way to explain DAOs: permissionless but not managerless. Like I think is like the best memified version I've heard. So I guess Ross, taking the what Stani has just highlighted, the Aave protocol, their governance structure. What do you think that they could adopt from like the DAO world to make it like to improve upon it?
I can't, prescribe improvements, on his protocol, but generally, I do hope he leans into token governments, bring in the community. He obviously has a lot of users that are excited about, the opportunities of Aave. They're clearly going to be the people you want to ride with long term, and who should have a sort of voice in your protocol, not outsiders or people who are tourists in the scene. So I think you get that. You've obviously been in the industry for a long time. You're building useful protocols. Yeah, just double down on what you're doing. So yeah.
So that's very good points, and that is kind of like what we're going for, and kind of like the funny thing that the community changes a bit over time, and then we still see like people coming back from 2 years and saying, hey, I'm still here, and kind of I haven't left anywhere, I've been lurking, or someone just says that I was busy for a year or so, and what's going on here, so people still follow, like even if they're kind of like a passive.
Cool. That's awesome. So I want to get to a couple questions in the Q&A. Everyone, if you're online, please post your questions in the Q&A. We're going to answer a couple of them. I'm going to start with Samarth's question. What do you all hope DeFi will provide to retail investors? Do you think that its speed will allow for decent competition with day traders? Let's start with Ross, and then we'll go to Stani next.
Yeah, I hope it provides a truly modern competitive solution to savings. Right now, people earn basically nothing to save their money. So DeFi using programmatic, sort of transfers and opportunity finding on protocols such as Aave, it gives people a fighting chance, with their money, and independence. So I think DeFi can help people grow their pot. There are a lot of speculative opportunities within DeFi, but in terms of retail, when I think of retail, I think of people that don't know anything about crypto. I really want to put them into a sort of safe lane of just like earn on your deposits, chill, don't leverage 100x on, Bitcoin, just chill, that's kind of my sense there. And, DeFi can actually be a sort of, a social good, an alternative to the banking system that I think is exploitative and just generally kind of sucks. So yeah, that's my whole gist there.
Stani? I agree. Retail investors?
Yeah, I agree. Like basically that interest rate yields are pretty good for like when they're competitive. And one of the things we launched today is that you could actually go from dollars, credit card or bank transfer, basically straight into ADAI. So you will have interest-bearing account in one purchase. So that's pretty cool. Yeah, and also I would like to get this perspective that if the credit delegation is a way to source liquidity out of DeFi, what you could actually do is that liquidity could be sourced to money lenders and eventually to consumers. So my vision is that a consumer goes to, let's say, to buy something, and part of that or fully of that liquidity is purchasing power is sourced from DeFi through the money lender and the wholesale market of borrowing and lending. So that would be pretty cool. And of course, like the A tokens, like ADAI, AUSDC, they're pretty cool in terms of adoption, because you can just transfer that thing anyone, anywhere in the world, and they will have a global interest-bearing savings account, which is fighting against the USD inflation and also has automated treasury management. So that's epic.
Yeah, I think that makes a lot of sense. I think what you both hit on a bit, which I always really like, is that DeFi doesn't mean that everyone has to be their own bank, but it means that everyone can be their own bank, right? Again, just giving people the option to manage their own money, right? We like optionality, I think, is key, permissionless optionality. Moving on to the next question. I think we kind of talked about the malicious behavior a bit. I kind of like this other question, if we're all okay with it. If gas fees are a problem, would either of you consider building DAOs on a protocol that isn't ETH?
Not necessarily, because, does this other protocol have a stable coin, that has liquidity? Does it have a programming language like Solidity that I can understand, and has a bunch of developers kind of scoping out? I think those are hurdles to me moving if there's not a greater value proposition, beyond just saving on transaction fees, because I'm paying transaction fees to tap into something that's more valuable than the gas. It's not just about, anyways, yeah, that's probably obvious. Yeah, but that's my take. Yeah.
Stani, same kind of idea?
Yeah.
Yeah, I mean, we try to be like, we're Ethereum fans, but we try to be agnostic and not just not just the gas, but also like if there's interesting technology and that makes things more secure or advanced, efficient, definitely. And I think breaching liquidity could be done. And like what I like about like the new chains that are like they're kind of like big bangs. There were different parts of universe where things starts from ground zero, like how we build this thing. Like it's kind of like a new island, and you have a bunch of people there and kind of like starting to build things for themselves, for their community. And I really like that a lot, the idea that you can just start fresh somewhere and build things, and also build in a way that you have to look at the ecosystem, like and how the consensus mechanism work and what you can do and can't do. And I like that part a lot. But in terms of like when we'll do that at Aave, I think we have priorities a bit more differently now. We're working quite a lot on privacy. But yeah, I mean, to-do list to check some of these. We do research, but to kind of like test some cool stuff.
Awesome. Go ahead, Ross. Do you have a comment?
Yeah, I was gonna say, like, I don't want to say that I think people should be complacent and maximalists, but generally the theme is like just go where whatever transaction cost should be outweighed by the value of the network you're using. And so far, I do think Ethereum beats other networks in that regard, but it's a completely new field. This idea of programmable value sitting on the internet, non-state money, so I don't think it's been written yet. So yeah.
That's awesome. That's awesome. I would agree. I think that makes a lot of sense. And with that, I want to start to kind of try to wrap things up a bit. I want to first thank Ross and Stani for jumping on this call. I will say, if you guys, I'm going to give it to you in a quick second. Yeah. If Stani and Ross, if you guys have a couple minutes to stay after, we have separate tables on this Remo networking platform. If you guys jump to those tables, Stani, if anyone shows up, if you want to go listen to the features that Stani just released with Aave, go to that table. If you want to, Ross is doing some really cool work at LexDAO with governance as a service. If you want to hear more about that, please go jump to the LexDAO table.
Just one thing. It's 5 a.m. here, so I'm going to sleep. But if someone wants to hear, I'm in Telegram, or basically I can put my my handle if you have any questions when I wake up. So yeah, feel free to reach me out, and definitely want to tell more.
I'll probably do some quick LexDAO at my table, but yeah, it's also kind of late here in Brooklyn, so I'll probably turn in, kind of soon. But yeah, no, it's been a pleasure. Great conversation. Great questions. So yeah.
Cameron?
Yeah, thank you, Aaron. No, this was a really, really amazing talk. So I'm gonna let you guys get to networking very shortly. I just want to give a quick explanation of what the Blockchain Acceleration Foundation is, also known as BAF. We're a 501c3 nonprofit that is it's governed by, I'm trying to create the sort of first sort of decentralized tax-exempt organization. So we already have our 501c3 status, and so we're taking it very, very slow here. Currently, all the board members are the presidents of every blockchain club in California, a university-affiliated blockchain club. And what we do is we work together on building curriculum to start accredited courses. We get people jobs in the space. We're hosting events like this. We help the student organizations make sure that they run smoothly and they have marketing budget and stuff to ensure that people are learning about blockchain on campus. So we're doing a lot of great work. And we have this membership application. We've been at this for about a year and a half, almost 2 years now, and everything's been completely free. The one thing that we suggest for people, or that we are trying to mandate, but it's pretty hard, is that everyone just takes this membership application so we could better understand how we can give the services and essentially connect people where it's most efficient. So some people are looking for recruits. We have engineers. We have developers in our network. Some people are looking for BD people. Some projects are looking for investors. So ultimately what I want to do is create a completely sort of automated and eventually decentralized organization that just connects people to accelerate the blockchain industry. And we're taking it slow. We're working within the confines of traditional regulatory structures and university politics. So we start accredited courses. We started one at UCLA, one at UCSB, getting another one at UC Davis started. And these are going to be the one at UC Davis is going to be project oriented. So if you have any ideas of student engineers building things, please drop us a line. The next thing is that our next event is going to be with Preston Van Loon, Labs, where it's a collab event between BAF and Blockchain at Berkeley. And that's going to be on July 30th. Next week, we're going to be doing these events every single week. So next week is just going to be a public call where I'm going to run through everything that BAF is doing. We're doing a ton of stuff applying. We have NSF grants in the mix. We have a bunch of different, ecosystem grants that we're looking for people to build stuff on. We're going to run a validator program with a bunch of universities. We're doing a ton of stuff. So that's going to be the best place to sort of tap into, learn what we're everything that we're doing. And then the last thing is that we're a 501c3 nonprofit. The reason why we started is because there's this incentive layer that's missing in order to get companies to donate their native token to receive a tax deduction to accelerate the blockchain industry. So for those who don't know, if you donate cryptocurrency that you have a lot of capital gains to pay, it's very advantageous because you can write not only the donation off, but you don't have to pay capital gains on that donation. So to me, this is an incentive layer that is missing in the industry that we're working hard to address and to tangibly accelerate development and adoption of all the stuff. So that being said, we're going to drop our donation link here. It's very just if you're feeling generous, that's where you should go. And then the next thing is networking. So this networking thing is it's be kind of new to a lot of you. There's a bunch of different tables. There's sort of this networking etiquette that I'm trying to push. So if you're at a table, if you don't feel bad, if you just hop to a random table, you're not liking the discussion or whatever, just jump tables, go somewhere else, and meet somebody new, because there's a lot of amazing people here. Just don't barge in and introduce yourself. Try to find a nice time slot to or if you are at the table, wait to find the time to ask the person to introduce themselves. It makes it a whole lot easier. And with that being said, just want to make sure I didn't miss anything. Yeah, that's pretty much it. Hope to, yeah, what's up, Aaron?
Yeah, one last thing. So, like we said, this is we're a 6-part series that the SF Decentralized Meetup group and Blockchain Acceleration Foundation is doing. Each time we're bringing together protocol and DAO to face off, if you will. So next month we have our next meetup on August 19th. I want to say August 19th. So we'll send out links there. Come follow us on Twitter, and you can follow along. And yeah, I'm excited to see everyone. Thanks.
Awesome. Yep. And last thing, drop the membership application if you want to get in touch. Fill that out. Let me know. And we will go into networking. Just make sure you turn your camera and mic on. Thank you, Stani. Thank you, Ross. Thank you, Aaron. This has been awesome. And see you guys soon.
Thank you.
Thank you guys. It's awesome.
Cheers.